Good afternoon, everyone. So for today's volume spread analysis session, right, it is slightly special. I'm gonna combine it together with the ahead of the curve sessions, which is like both the volume spread analysis plus the ahead of the curve. The main reason is that while I believe the main purpose for this video is to share some of the volume spread analysis used in the trade setup of Frencken. I also like to share the trade Frencken itself, mainly because it is one of our long-time winning counter also. In fact, alongside with Propnex, right, Frencken first trade setup came all the way back sometime in November when the price was somewhere around $1. And you can see that Frencken currently right now is at $1.76. So it came out about the same time as Propnex. Propnex actually came out about slightly a few weeks earlier in October, Propnex first trade, and it was around 60 cents. And currently Propnex is like, I'm not sure what's the price right now. I think about 1.6. So these are the one of the biggest winning counter that we have been holding since last year. And I think it is quite a good, like a post-mortem analysis to go through some of the counter. And do notice that we currently still have a running trade on Frencken. So I will go through this also. But let's step back into the time machine and let's go back to last year, November. You can see that the very first trade came out in November 14th of November, somewhere around this stage. And after which we have another trade setup that came out in December 2020, where we actually TP'd from the original position, and now we have a second entry that is coming into play at somewhere around when Frencken was at 1.3. Then after which we also have the next trade setup sometimes in February 28th. So that was when Frencken retraced quite substantially from the top at 1.45, and after which we have a very good recovery that come into play. So we will manage to get the trade also. So this is the third trade that we had on Frencken. And lastly, of course, the most current trade setup that we have right now is actually on the 18th of May. So this trade setup we are still holding because it is still quite a bit from the TP level, but like I said, as long as it doesn't hit the stop loss or TP, right, the trade is valid and we will continue to hold this trade. So if you have, okay, so if you have listened to the Propnex video, the ahead of the curve on Propnex, right, you will notice that I mentioned, if we keep having the same setup on the same counter, for example, if a setup on Frencken keep appearing every time, maybe almost every time we hit a TP, it appears again, right? Chances are that this counter is extremely strong. Hence, we are adding position into our winning trade. And eventually this position will snowball into a very, very big win. But the thing is that from the very first trade that we enter for Frencken, when we enter at 1.05, we have no idea that it is going to be what is right now. We have no idea that it is currently going to be at somewhere around 1.78 like that. So what we do, it is important that along the way, we do have to TP once in a while to ensure that we have cash in our pocket. So we do not suffer a loss during a retracement like this. And in fact, we did not suffer any loss here because we were able to TP somewhere around at 1.4 sometime during our second trade. And when the price retraced and the recovery came in, we managed to initiate that trade again, and we were able to get that very big, the next big trade in the next rally that comes here. So of course, we cannot always look at the chart right now and go into the hindsight mode and think that, oh, you could have hold until here. that is a very, very wrong way to look at trades and look at charts, because you have your hindsight goggles on. With hindsight goggles, every decision, of course, you will come to the most optimal decision, which is to buy here and hold until here. But of course, when we were trading back then, right, we didn't know that. You have no idea that this could be a top. We have no idea that this can recover. So we need to keep taking profits. And of course, when the trade presents itself again, we definitely need to make that entry again. That is a much safer option. So let's look at the original trade setup itself, the very, very first trade setup that we have received from here. Okay, so there were a few candles, volume spread analysis that we can use. So as I mentioned, right, when you are looking at candle, when you want to analyze a candle or analyze a particular area of a chart, right, you cannot look at the candle by itself. You need to analyze candles and volume together. They cannot be separated. They are one entity. But not only that, you cannot just isolate a candle and try to make sense of it. You need to look at the surrounding of the candle. You need to look at where the candle is, especially if the candle is somewhere around resistance or support, right? Then the analysis hold more power. It is more meaningful. So from the chart of this Frencken, there are quite a few obvious things that you can see here. Number one, right? Obviously an uptrend. So the key thing now is we don't know whether if this is going to go down or go up. But of course, we eventually have a long position, so we are towards the bullish buyer's mode. But of course, you need to understand why certain why is the buyer stand. But secondly, there is another very crucial factor that you need to look at. This area is actually a support that was previously a resistance. Previously, it was a resistance here, and it broke out the resistance. Now it is retesting this area as a support. So this price level is actually a very, very crucial level. So if we were to analyze the behavior of candle and volume at this level, right, we can actually deduce with good enough probability on where the price is going to go next. But I need to emphasize the usage of the word probability, because just because you analyze everything nicely, it doesn't mean it is 100%. So there is no 100% trade. If there is an analysis that can give you a 100% trade, right? A trader can mortgage his whole house, take up a second loan, sell his car, sell all his belongings, take all the money, go to the bank, use that money as a collateral, go and borrow 100 times of whatever you have deposited, take that 100 times, you go and leverage another 20 times more on a CFD account. And then with that, you can place it in this trade and you can be a billionaire overnight. So because nobody is doing that, because there is no such thing as 100% trade. So when you are trading, right, everything is in probability. Something has a chance to happen, but sometimes certain scenario has a higher chance to happen. So you need to always think from that perspective. There is no such thing as 100%. This is something that I need to emphasize very, very greatly, because a lot of traders out there, they over trade, over risk, because they think, alamak, this analysis confirm win, then end up losing a lot of money. And the second thing is, while we can somewhat deduce with good enough probability that this can go up, what we cannot deduce from our volume spread analysis is the time. Time is another unknown factor that very hard to deduce. And in fact, there is no way to analyze the time frame. Meaning, if I look at this chart and I come to a conclusion that, okay, this chart is probably bullish, but what we cannot analyze is when is it going to go up? Is it going to go up tomorrow? Is it going to consolidate for another 3 more months or 1 more year? Or is it going to like consolidate 1 week and then go up? We do not know. So the time is still a very big question mark. Okay, so the time we are unable to deduce. Hence, for those who have been here long enough, I always emphasize that do not exit unless your stop loss is hit, because the time is a question mark. We have no idea when it is going to go up. We know that it might go up, but we don't know when. So bear these 2 points in mind. No matter what kind of analysis, what strategy, what funny thing that you go and learn, right? These are the 2 things that you will never be able to pinpoint with 100% accuracy. Number 1, there's no such thing as a 100% trade. Number 2, you cannot analyze the time frame of when is a particular price is going to move. Okay, so with that said, right, here, let me just repeat. This level is very crucial because it is a resistance turn support, and by analyzing the candles and the volume at this level, we are able to deduce with quite a good accuracy on where the price is going to move. So number 1 here, number 1 thing, let's look at this candle first. Okay, let's take a look at this candle. Okay, so just by looking at this candle, right, you can see that as the price moves towards the previous resistance level, bear this in mind, at this stage right now, it is too early to say that this is a support. This is a resistance turn support. We know previously that this is a resistance, but right now, we do not know that this is a support yet because it only hit once. It can actually go back down. And if that's the case, this is no longer a support. So in order for this level to be confirmed as a support, right, it have to be sort of tested multiple times. Then you can sort of deduce that this level is okay. This is a support. Okay, does that mean that entering at this candle is wrong? So if you enter at this candle, it does seem like a very bullish recovery. It is not wrong. It is not wrong. In fact, there is a good chance that it can shoot up straight. But the danger lies here that it is slightly more of a gamble. Not only that, right? If there are seller present, if there are a lot of seller present, what you're gonna end up is you're gonna stuck in a sideways for a very long time. Hence, I try not to enter at this kind of candle. But of course, somewhere later down the road, you will see there are a bit of rules being broken lah. But also do note that at this point, right, when the candle was at this stage, this counter have not come into my radar yet. It only came into my radar sometime slightly later lah. So from here, we can deduce a few things. Number 1, the selling has subsided, mainly from the fact that you can see it is sort of flattening. Not only that, you can see the volume is also flattening. Volume flattening as support, right? It does mean that there is a lack of seller. And after there is a lack of seller, right? After the market is sort of asking for seller, like the smart money will sort of leave the market alone, and they will like test the market for sellers, like, hey, who's selling? We are very near the support already. Who's selling? Who maybe support can break? Anybody want to sell? They are baiting out the weak holders. They are baiting out the weak holders to come out, because a lot of weak holders when the price hit very near to the support, right? They cannot take it. They think that, oh, support confirm break, so they sell much earlier. So smart money is baiting out all the weak holders. And after that, after there isn't much selling happening, which you can see by the lowering in volume, right? There was a big buy-up from the smart money, which you can see by the big volume and the big candle. So this one definitely smart money is involved. They are buying up. So after they buy up, right, does it mean that it's gonna go up straight? No, it's not. So once again, I mentioned the timing is we don't know. We don't know the timing. And also mainly because while we know that there are no seller here, we do not know if there are any seller here. We do not know whether if there are any seller here. So these are 2 price level. One is at 0.95. The other one is somewhere around 1.05 or 1.1 like that, around this level. So at 0.95, it is quite clear that perhaps there is not much seller, right? But maybe at 1.1, there are sellers. So smart money cannot blindly push up the price level and assume that there are no seller, because if they do, right, selling will come in and they are no longer able to push and end up they might incur a very, very big loss. So what they do is sometimes after buying in, right, after buying up, right, they tend to leave the market alone to once again bait out the sellers to like sort of make sure that the seller come out like, hey, I push up the price already. Anybody want to sell? If anybody want to sell, better come out now. So the thing is they bait the seller out. So if you are ever the kind of trader that after price rallies up a bit, right, and your heart itchy, cannot take it, want to quickly grab the money run, right, the smart money is baiting you out. You are one of the victim of such a big movement, okay. So next, by this candle here, this candle, at this candle, it is very obvious. So this is the first attempt at a recovery. And during this first attempt, right, it is very clear that there are seller here. There are seller here by the very big, by quite a substantial rate volume. And the candle itself is also very quite bearish, mainly because price tried to gap up here. You can see price tried to gap up here, but after that it closed now. While it doesn't close day low, right? I would think that this is still quite a bearish candle coming in. So now it is very clear that we have selling happening at somewhere around 1.08, and we have no selling at somewhere around 0.95. So what happened is now we have a very tight zone that is forming. So either the selling here has been exhausted, then price can move up, or the selling is so overwhelming that perhaps the buying at the support cannot able to hold the price and price will come down. So these are the two scenarios, and we do not know at this point, we do not know which one. We do not know which one. Hence, we do not want to prematurely make any kind of trade, prematurely make any kind of decision. So let's wait a few more days. And what you realize is that as the price come back down to this support level at 0.95, you can see that the volume subsided also. The volume has subsided. Meaning each time it comes to support, there's no volume, meaning there's no seller. Nobody is interested in selling at this price, probably because it's too low. And in fact, when the selling at this level dissipated, right? You can see price will recover back with high volume in this manner. So you can see here, at the support, the selling, no selling at all, very low volume. So once the selling has sort of exhausted, right, price recover again, price recover back up again. You can see each time price recover, right, the volume is a sudden spike. The volume is a sudden spike compared to the very, very low volume that was the selling. So buyers are interested in this level. So this one we can establish already. Buyers are interested in 0.95. Hence, at this stage, we can safely conclude that this is a very good support. At this point, it is still a question mark, but by now, we can conclude that this is a very, very good support level because buyers are coming in. So once again, let's let the price run a bit more. So now we come back to the same level at the first candle here, the first bearish candle here. We come back here again, and once on our second trip here, right? What you realize is that the selling volume here is not as high as here, not as high as here, but still selling is still present. Selling is still present. It is just that not so much as the first time round. So in a way, the smart money sort of, okay, the smart money is quite conservative here because although it does realize that there is not much selling as the first time round, it doesn't want to take a risk. So what it does is it let the price fall back again. So you can see that during this stage, right, price is actually consolidating. And if you are that guy that went in here, and then your stop loss is like not at the right level, and then end up you get caught in this consolidation movement, right? most likely you are not able to hold this position and take the profit maybe a few months later on. So in this situation here, right, what is the key thing that is preventing most traders from taking profit in what seems like a very good rally in the future? That is, number one, traders do not know how to place proper stop loss. Traders tend to place very tight stop loss because they want and they expect the price to move immediately. But in fact, about 60-70% of the time, price is not going to move immediately. And in fact, trader, even though they entered the correct trade, they are still going to get flushed out because number one, the stop loss is not placed correctly, hence their stop loss was hit. Number two, they are impatient. They are not able to hold through this period because they always want the profit to be hit the next day. And if you recall what I mentioned earlier, right? Two things that volume spread analysis cannot predict is number one, the timing. Number two, it is not 100%, it is a probability. But of course, that combined with a proper stop loss strategy will ensure that even if you enter here, right, you could have stayed in the trade, but only those really experienced trader will be able to stay in the trade had you entered at this candle. For most novice people, most beginner people, right, they are most likely not in the trade ready. And eventually when Frencken rally, right, they will be like, Alama, should have hold lah, yeah, why I exit lah. They always keep saying that. But the thing is, even in the next 100 trade, they keep doing the same thing over and over. And when price rally up, they always say, yeah, should have hold lah, yeah, should have hold lah. So it's like they do not have a proper discipline. They do not know what they are doing. They are just anyhow only. Okay. So so now smart money is slightly conservative. They still don't want to push it, so they want to sort of test the market the third time. So price come back down, and once again, right, as price come back down, you can see that the volume tend to decrease also. The volume tend to decrease, indicating that actually there's not much seller around. There isn't any selling that is interested at 0.95. So now, at this candle, suddenly you can see that there is a sudden spike in the volume again. There's a sudden spike. So you can see all these volume spike. And in this sudden spike, right, we can see quite a good bullish candle coming in also. Quite a good bullish candle. And actually, this is where we entered. So this was the first trade setup. Sorry, not this, my bad. So this is where we first entered here. And you can see our stop loss is at 0.915 because it is slightly below the support. We do not want to be at the support, but we want to go slightly below the support. Okay. So this first trade setup came out. And in fact, this trade setup, right? This trade setup is actually not, in my opinion, looking back and analyzing my past trade. I always analyze my past trades to see what can be done better. And this is one thing a lot of traders, they doesn't really do. And in fact, that alone is the downfall of many traders who are not being able to profitable. They just want to enter and exit. They just want the money. They do not want the hard work. They do not want all the analysis, all the drilling and all the basic hard work that they need to be profitable. They don't do that. But here, right, when I'm posting trade setup and I go through all my close trade to see whether if things can be improved and what could I have done better. Okay, so my trade setup are very, very systematic and disciplined, and it is always improving. So at this point, right, the reason why I say this trade setup could have been improved is mainly because at this point, we still do not know if seller are still present here. In fact, by buying here is actually slightly risky because if seller are still present, price could have just come down and then I'll be stuck in this sideways for quite some time until the market is ready to rally lah. Although it is very bullish, although the chart itself, the volume, the candles itself is bullish, right? It does pose a risk of getting stuck. because of the fact that we don't know if there are sellers still present here. So a better trade setup will be to wait for the price to break out first, wait for the price to break out first. So that would have been a better trade setup. But I guess at this point here, right, what I was going for is that I deduced that, okay, the first time round, there are definitely sellers. Second time round, selling volume have reduced. So this third time round should not be seller ready, price can go out ready. So that was basically my deduction. Although it is slightly riskier, right? It does the trade setup still based on a very, very good foundation and very good discipline. And in fact, my stop loss was below the support. If other people were to take this trade, right, their stop loss will be like very very narrow, very greedy, that kind of trade setup. In fact, if you have a very narrow trade setup here, right, you might end up getting your trade stop out. So what happened after here? As price go back here, right, you can see that it didn't immediately rally. It came back down. Hence, if you are the greedy kind that play contra, go and put a very tight stop loss somewhere along the candle, right, you are definitely out already. But because I'm very conservative, right, I placed my stop loss somewhere below the support, right, I was able to hold this trade, and of course immediately price go up. And at this point, you can see that during this retrace, right, the candle volume is extremely small, meaning it is indicating that no seller really. So price went up. Price continues to went up, and what you can see here is that we were able to hit our TP at 1.17 and the next TP level at 1.24. So we were able to hit that two trade here, that two trade setup here. In fact, on this candle, we hit the 1.17 already. So as we let the candle go, we were able to hit the other TP level at 1.24. And at this stage here, right, we have actually broke out of the all-time high resistance already. We have actually broke out of the all-time high resistance already. So with that said, let's come to the second trade setup, which was actually on the December 20, 2020. So it was somewhere here. This candle, okay. So this candle, let's look at this trade setup. So with a little bit of a volume spread analysis, okay. So obviously we have a very this level here, which previously there was a lot of selling. You can see that after this, after it tries to rally, right, there was selling happening. But on our trip, on our second trip here, as we go into this zone, what can you see here? You can see a cluster of candles here, and you can see the volume on this candle, right, is extremely low. What does it show you? It shows you that selling has dried up, selling has exhausted. There's no more selling at this level. Previously, there was a lot of selling, but right now, no more selling already. The selling has been exhausted already, and along the way, there will be buying, a lot of buying happening. And when that happened, right, there were one bullish candle that came out here. There was one bullish candle, this bullish candle that came out here. But I did not enter at this candle, mainly because it is slightly risky. We have not broke out yet. And in fact, when I tried to enter here, right, when I was thinking about entering here, I was reflecting back at what I did here. So even though I profit on this trade, right, I got the money in on this trade, right, I will still look back and make the improvement. Just because you profit, you get the money, doesn't mean your trade is perfect. In fact, you can do all the wrong thing and you still profit, and it is what I call toxic profit, because it encourages you to keep doing that wrong thing, and sometime in the future, all the loss that you incur, right, will be probably much higher than that one time that you have profited. So even if you profit, right, do not get cocky. Always reflect back at your trade and identify what are the good trade, what are the toxic trade, and what are trades that you can improve even if you have profited. This is very, very important. So at this point, I didn't want to take a risk really. I probably want to wait for a breakout, and eventually that breakout happened. The breakout happened here, this candle here. So hence this trade setup came out. This particular trade setup came out. So at this point here, the stop loss was placed at 1.10 in order to sort of go below the selling. So I have mentioned that this is a very crucial resistance. And in fact, previously a lot of selling here. Right now, there's no more selling here. So I want to place my stop loss here, because as long as price is above here, right, meaning there's a good chance that price can continue to rally up. If your stop loss is anywhere above this area, right, anywhere above this line, right, most likely you are going to get hit, because it is still an unknown. It is an uncharted water. But if let's say price broke through this level, right, then we can be pretty sure that price is going to hit back down. So you need the important skill is to determine the price level where your trade is still valid. And in fact, this is the most important skill as a trader. Determining a price level where your trade is still valid, and that is your stop loss, and your stop loss become your trade validity. And this is the very most important skill that my 3 months course teach. So of course, at this point here, I'm not going to be sharing how to properly choose a good stop loss. In fact, choosing a good stop loss will propel most of you from being a bad trader to a good trader. And if you are interested in learning about that, right, do come to my course. So now we have the second trade here. And of course, looking at the second trade, right, the TP level is somewhere around 1.45 and 1.6. And of course, if we let the trade run, what you can see here is we briefly hit the TP here. We did hit the TP here. So now the question comes, why must we TP at 1.2 and then re-enter again at 1.2? Why can't we just hold all the way? So the thing is, if you hold all the way, right, at some point here, at some point such as this, right, price can just come all the way back down. So if price come all the way back down, right, you are actually going to lose a lot of money. So in fact, it is very important that somewhere along the way, right, you TP occasionally, so that at least you keep your money in the pocket, because you do not know at which point price will just come back down. It's a very big question mark. You cannot predict that. There's no way for you to predict the top. So the best thing you can do is to occasionally take some TP and put that TP in your pocket. Because if you enter the second trade and you sort of held there, right, most likely price is going to go back down, and you will lose this much. And the common argument I get is, but so like that commission, how commission this like that. Now if you think about it, there is a lot of brokerage out there that offers very, very little commission. Tiger Broker minimum commission for Singapore is probably $3. And if you are in the promotion zone, right, I believe this is the promotion zone, there were no minimum brokerage fee at all. So are you that stingy that because of that $3, you are willing to let your profit go down by a few $1,000s? Are you really that stingy? You have to ask yourself. So because of $3, right, you decide to hold a counter, then end up you miss like a few $100s worth of profit. So that is one of the worst arguments that I always hear. Whenever I TP and then next day I buy again, right? A lot of people say, oh, you waste your brokerage fee lah. You might as well hold what, because I pay $3 to exit, I pay $3 to enter, then it's like $6 already. And if you are on those prepaid cash account brokerage, right, it's probably $10. or if you are on those CMC lah or the CT DEX lah, the commission is probably $10 also. So you exit with $10, you enter with $10, re-enter with $10. Again, it's actually $20. So even on a $20, yeah, my commission $20, but don't think of it as a commission. Think of it as a insurance fee. Think of it as an insurance fee to protect your profit, put that profit in your pocket. Because sure, you can shift your SL, but the thing is when the price come back down, I tell you your SL will fly out of the window and you immediately start shifting from a break even to a loss, and then end up all your emotion take over, right? You cannot handle one. So to be very safe, right? Sometimes it is worth spending that commission fee to protect your profit. Please, please do not, because of $3, $10, go and throw away a few $100, a few $1,000. That's the worst thing that a trader can do. All the trader, very, very funny. Want to be millionaire, want to earn 10K, 20K, but come to $3, $10, very, very stingy. I have no idea what's going on. So, okay. So the third trade setup, is actually on this candle. So this trade setup was it was a gamble. It was a gamble mainly because the recovery was very strong. In fact, this was the resistance. This was the previous resistance, and at this stage, it seems like the resistance has turned support. Of course, as I mentioned earlier, this one not confirmed support yet, but because the candle is so strong and the volume is so strong here that I am willing to take a risk here to sort of assume that this is the bottom. This is the bottom as of now. So I was willing to take that risk there, mainly because of the candle and because of the volume, and also it is happening at the previously resistant, now support level. So because of that, there was the third trade setup that came out. Let me, sorry, give me a moment. There was a third trade setup that came out here. This third trade setup, and of course, once again, you can see that my stop loss was quite conservative, all the way down at 1.05, even though the price was at 1.35. Mainly because what I was trying to do is, you remember that previously the stop loss was somewhere here also, here and here, okay? Somewhere here also. And in fact, I want to go below this whole section here. Just at the bottom of this candle is not good enough. I want to be much safer and go all the way here, because at this point, right, my mentality is, if price come back down, I am willing to hold. This if price come back down. And if it consolidate, right, I am willing to hold also, but I do not want to get stopped out. So I need to go below the next selling level here. So this was the previous selling level, and I'm going below that previous selling level. Hence the stop loss was somewhere around 1.05. And let's see how the trade takes us. And you can see here is very, very risky. Price came all the way back down. And let's say if you are the greedy kind that expect the price to move up immediately after this candle, you will have been stopped out. Okay, so this one important. Just because you see one big bullish candle come out doesn't mean next day is going to fly up. This is also one of the leading cause of a lot of traders going contra and losing a lot of money. In fact, I have a statistic. I have taken enough trade in this lifetime to make this kind of claim. Any bullish candle like this, right? The chances of it keep going up straight, immediately go up straight, a lot of bullish candle follow up, right? It's actually about 15%. And the chances of it retracing and consolidate a bit, then move up, right, is about 85%. So if you want to contra and risk your money based on a 15% winning rate, right? That's your choice to make. But do better in mind that a very good bullish candle doesn't mean it's going to fly up the next few days. It does happen, but normally it will retrace first. Normally you will see it will retrace first, retrace first, then it will fly up. Okay, so make sure that your stop loss have to be proper. So the thing that is keeping me in this trade is my proper stop loss. It is not my entry. My entry doesn't matter here. My entry doesn't keep me in the trade. What kept me in the trade is my proper stop loss and my discipline. And eventually, of course, we were able to hit our profit target for this particular trade, which was somewhere around 1.60. We managed to hit here, 1.60. So if you notice, right, our first trade actually from here, right, we have been consistently in this trade all the way to 1.60 already. And in fact, this whole thing is about 53% already. We are up by 53% on Frencken alone. And along the way, right, once I have a second trade, third trade that I profit, right, I am I will be more willing to go into this counter again because it is obviously a very, very good uptrend counter. Hence, that's why the scanner keeps showing this counter. Hence, the trade setup keep coming for this counter. Hence, you should always take a look at those counter that keep showing up on the scanner or on my trade setup. And of course, once again, we have quite a good retracement, but you can see that by this time, right, 1.6 at this time, we have already TP here. So it is good to TP. Put money in your pocket. Don't because of that $10 you go and suffer this whole stretch. And in fact, the thing is, a lot of people say, but by recover what? But my question to you is that can you honestly tell me that you can hold this? Can you honestly tell me you can hold this drop and drive the recovery? For a lot of traders, probably no. So it is good that we occasionally profit. In fact, if you remember, we took a profit here, we always buy, and after that we re-enter again, meaning the cash that we took in here, right? It is free to do other things. We are not locked in this trade and waiting for it to recover. So what if the trade doesn't recover straight here? What if it go down and then it goes sideways, and then if you are lucky, it can recover. If you're unlucky, it will go down some more. So so now your profit, actually what could have been a profit now become a loss already. So this one, big no-no. Always once in a while, be prepared to take the profit. It's good to take the profit in the pocket, put the money in the pocket. If a good trade setup come back again, you can trade some more, but always good to money in pocket once in a while. So that's bring up to the most current trade that we have right now, our most recent trade, which is on the May 18th. So the May 18th trade is actually right here, this one. Oops, sorry, not this candle, but this candle. Okay, so the trade setup for this candle was actually very, very simple. Number one, right, it broke out of the resistance. And number two, what was previously a support, right? It does seems that, what was previously a resistance, right? It does seems that now it has become a support. So you can see it very clearly, very, very clearly from my trade. You can see very clearly from my trade that the stop loss is actually below that support area, below that turning point. Okay, so this was a very simple trade setup. There's not even any volume analysis involved here. This was a very simple trade setup. I just entered at the breakout candle and the stop loss is placed below the previous support. So if you are the hindsight people, those wearing hindsight goggles, you can come and say, then you could enter here, blah, 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 blah. So the thing is, if I enter here, it can go sideways and come back down. We do not know. We do not know that. Hence, good to wait for the confirmation. And then you buy the bullish candle. So the reason why I buy at this candle is that not only it was a breakout candle, right? It was also the first bullish candle with good volume that came up. At this point, right, you can see that at this support here, the candle itself is not bullish at all. You can see it's not bullish at all. In fact, if I look at this, right, it does seems like going to go down a lot further. So that's why it's very important. Never ever predict the bottom. Do not predict the bottom. If you predict the bottom here like this, if it goes down all the way, then you are gone already. So it is better to wait for a recovery. So it was only by this candle here, that a substantial volume came up together with a good increase in price. Even the previous green candle, right? Even this previous green candle, it is a bit lackluster. It is a bit lackluster. The volume that cannot make it. In fact, this doji candle has a very high volume. It does mean that selling might be present here. Selling could be present here based on this volume and this candle. So if you enter here, right, it is still not very safe. It is only by the next candle, oops, the candle disappeared. Yeah, it is only by this candle that I have an equal volume that could match the doji, meaning the buyer have taken control already and the candle itself is quite bullish. It is by then I am very confident that, okay, the bullish force is in play, and in order to stay in the trade, right, I should at least, my stop loss should at least be below this doji candle and below this turning point, and I will have a very safe trade. So that's basically the end of this session, and how I use volume spread analysis alongside with things like following the trend candles and trend following is very, very basic stuff. I think it's something that everyone is able to understand. But what is going to push you up your game, right? It is to be able to have the skill to integrate volume analysis alongside with the candle and the support and the trend. By doing that, right, your success rate can go up a lot. And of course, alongside with it, the skill to set a very, very good stop loss is definitely very, very important as well. Because as I mentioned, no matter what form of analysis, it is not able to predict the timing. And it is not also 100%. So in order to make up for the timing and the 100%, right, you must have a good stop loss to ensure that you stay in the trade. Stop loss is there to make you stay in the trade, okay? Stop loss is not there to limit your risk. Yes, it is there to limit your risk, but more importantly, it is there to keep you in the trade as long as your trade is valid. And of course, if we look back all the way back to November again, right, the very, very first trade that kickstart this whole journey, right, is of course we heavily utilize our volume spread analysis here, and it is because of that analysis we are able to catch it at somewhere what I will assume that is close to a bottom here. So I do hope that this video gives you good insight to how you should be doing proper trading, and also about how volume spread analysis is done. In my course, I teach extensively on how to make use of volume spread analysis to come up with a trade setup that you can take. So I have a list of all the criteria that you must meet in order for you to take a certain trade. And of course, within those criteria, volume spread analysis is one of them. Another very important criteria is, of course, placing your stop loss. If you are unable to place a stop loss, we definitely do not take the trade also. So if you are truly interested and wish to learn more about such a thing in a very, very detailed manner, right, do come to my course. You will not regret it. And it does seem like out in the market, $3,000 is a lot, but what I'm offering is, it is dedicated. There's only 5 per group. So my time with you is extremely dedicated. It is not in a group of 50, 60 people. Secondly, it is 3 months. The whole thing takes 3 months, because there's no way you can learn trading over one weekend. You actually need, in fact, you actually need more than 3 months. But of course, within this 3 months, we are going to be learning a lot of things intensively. And if you calculate by per hour, right, my course is in fact one of the cheapest out there. And of course, if you also consider that you are getting more one-to-one time with me, and that is something that money cannot be bought. That's something that you can't buy with money. And I don't think any other course provider out there is doing this kind of thing. Because if I'm looking to make money, right, if I'm looking to make money from selling courses, that's the last thing that I will do. But in fact, my goal is, of course, yes, correct, make money also from selling courses, but ultimately, I also want those people who come to my course to make money as well. So that's why my course is designed and taught in such a manner. So have a good week, everyone. And I do hope, because now market is a little bit quiet, right? Maybe there are still not much trades that are coming up. We do not force a trade when there is no trade, but I do hope that perhaps maybe 1-2 days later, or even the next week, we will start to see very good trades that are coming. Okay, so stay safe everyone, and have a good week.